Hello, hello. Welcome back to another journal entry for the week of the 22nd. It was quite the week. Got some nasty market movement here, or it felt like it at least, because we've had such great price action for the past couple weeks. This week felt pretty bad with the pullback. So let's talk about how my trades themselves went, given these market conditions. So on options premium, I closed for a $737 gain. I closed swings for about $167 gain, and my closed day trades were a $6 gain. Let's talk about what really went wrong this week. The biggest lesson of the week. So on Tuesday, which was the first red day, like big red day in a while, I had a textbook example of revenge trading. And it's honestly embarrassing to share this, but for the sake of transparency and to enforce learning this lesson, I will share what went wrong and what I did. So let's go to the NVDA chart. Matter of fact, let's go to the 1 minute NVIDIA chart. At a high level, I took 11 trades on NVIDIA within a very short period of time on Monday, and I lost over $250 in a single morning just off of NVIDIA. So let's break down what happened. I won't get into exactly every single trade, why I entered, but I started off, and I'll show you my... So how did I lose over $250 on NVIDIA in one morning, you ask? Revenge trading. I took 11 trades pretty much consecutively on NVIDIA during a downtrend, increasing leverage on each trade until I forced myself to stop, and I stopped far too late. So my first trade, I broke even. My second trade was a normal risk amount, and I lost, and then I just leveraged up from there. I lost $100 on the third trade from just that singular trade. And then I had some, $10 win here, $20 win there. And then I had a series of another 5 in a row, losing trades, in which I lost another about $200. And I normally trade the 5 minute chart, but somewhere maybe around the fourth or the fifth trade, I switched over to the 1 minute chart to try to force myself into more entries, which is why I'm showing you the 1 minute chart here that I normally don't trade. And you can see how I was just drawing a bunch of bullshit, trying to force myself in when clearly there was no reason at all for me to be taking most of these trades. And yeah, it's honestly embarrassing. It was a horrible mistake. Thankfully, I did better for the rest of the week in terms of not revenge trading, which is how I ended up at break even for day trades this week. But this kind of trading is not sustainable, and I need to eliminate these sort of days from my trading. And now let's talk about the biggest chunk of my profits this week once more. Theta. Theta saved the day. Or Theta saved the week, in fact. As you may or may not know from my previous videos, I've been selling options premium on Robinhood for the past couple weeks with pretty great success. And on Friday, about $700 something expired, worthless, of all puts, pretty much, and then one buy right that I did. So the main mistake that I made on these options was doing an aggressive buy right when the market was not very happy. And to be completely transparent, on top of the $700 I made, I did a buy right on Thursday on Robinhood at a cost basis of $125.66. If we took a look at the Robinhood chart, I entered right here. I got really excited. I was like, oh, it's breaking the 5-day moving average. It's healthy, that's strong. We got still pretty decent volume here, all the way up there. And so I was like, okay, I'll sell a barely out of the money put for a possibility of a few more gains, given that I feel bullish at this point in time. And the options premium was $1.65, which covered the cost down to $124, and the stock's trading $121. So on this trade, I'm down like $300 currently. But my plan the whole time was I can turn this into a sort of wheel. I can sell options premium on it at about cost basis until I exit or become a bag holder, I guess. But I am perfectly okay with holding Robinhood. As for my swing trades, let me see if I can remember what I closed from last week. Alright, so I got SMR, I have NVDA, and JD. Look like they were the 3 swings that I had from last week. Let's look at NVIDIA first. In some ways, I was lucky, but I was also positioned very well to take advantage of luck. I had entered last week on Thursday around these major moving averages, and then on Monday we had big news. OpenAI investment by NVIDIA, $100 billion, and the stock shot up. I took profits along the way here, held a very small amount of shares, and then when it started dipping again, I got stopped out, I think around break even down here for the rest of my shares. I made over $200 on this NVIDIA swing. I closed out my SMR. For the remaining shares, I closed out for a small loss of like $10. I had some up here. I didn't really close. I thought it would continue, and after it broke through this 5-day, I got out. I think on Wednesday. And then for JD, I also got out pretty early, right when it was breaking down here. I got out, and that's fine. If it breaks above this trend line, I'll consider re-entering. But there seems to be resistance there. Small loss, like a $20 loss. Not a big deal. What else can I highlight for this week? Those are the main points of this week. I don't have to get into nitty-gritty detail on every single small trade that I took. Oh, I did sell a credit spread on Google for like $100 gain. It wasn't just Robinhood. Sold a put credit spread, 245, 242.5 strike, off of some strong volume that I saw. I really like Google. Right in here, I got a volume alert. Checked Google and bang, lots of buying. Options premium is, in a market you're not entirely sure direction, is a pretty good way to go. So yeah, I really need to focus on making sure that my head is in the right place when I'm trading, recognizing when I'm revenge trading, and to just take a step back. As soon as I stray away from designated rules is when I start losing, and losing big. Yeah, that's the biggest lesson from this week. We'll work on it. In terms of where we're going from here, SPY is currently below. Is it below? Below the 5-day. It's above the 10-day. So it's right in between these moving averages, but we had a really nice bounce off the 20-day moving average, and it's a stronger level of support. And so until the 5-day crosses the 20, we're still hanging on here. It's not a big deal. There's plenty of room up to the upper Bollinger. Had a pullback this month, so we're still in a position where stocks are likely to trend up. There hasn't been any horrific news. Yeah, still going to be looking to sell options premium. Still going to be looking to take longs. Maybe mix in a couple shorts. I did get it mixing a couple shorts on Friday with some success. So we'll see what happens this week, and yeah, good luck. See you in the next one. If you watched this far, thanks for sticking around. Just me yapping about my trades. but hopefully you learned something too. Yeah. Peace.